It's the usual Thursday stream hosted by me. Nothing is financial advice. Everything here is strictly educational, informational, etc. But yeah, let's just talk some flow. Ask me about contracts. Sorry, I'm reading the chat. Yeah, just whatever. We'll just freestyle it like we've been doing. But off the bat, something that we can just go over real quickly. We did this last time, but I think it's always just a good exercise that we can continuously do. It's a good thought experiment for people. So what I have right now up is the options screener, which is, as the name suggests, an option screener. It has data on every options contract. Right now I'm sorting by volume. So the SPY 680 0 DTE has 520,000 contracts traded, which is the most by far. But that's not what we're going with this. Where we're going with this is, if we were to build a filter based on this data set, what could we do? What type of filters could we use? So I guess we could just start in a logical order. So like, if we're trying to find contracts that have more, that are being opened, right? I guess that's the simplest way to put it. And one way that can help us, but it's not the most definitive way, but one way that can help us is to simply start with contracts that have more volume than open interest. It's a very simple starting point. You need volume, obviously, in order to have any kind of activity. And we want to be able to easily identify contracts positions being opened. So that will, that's a good starting point, but there's obviously a lot more to go into than that. I see someone's asking about Tesla in the Twitter X chat. We'll get there when we get there very soon. Right, so more volume than open interest. What's like a good minimum volume that we want to go with? I think the bare minimum might be something like, I don't know, 2,500. Again, these are just some values that we're going to spit out here. Obviously, 2,500 is way smaller than what we got going on up here, but some more stuff that we input will weed some of that out. I guess for simplicity's sake, let's just not look at ETFs or indices. Let's just look at regular equities. So we see some of our familiar favorite names up here, but let's just continue on. So obviously we need some kind of minimum premium value. Now, contrary to what a lot of people believe, it's not about like the $10 million flow. It's not even really about the $5 million flow. Now, there's no right dollar amount, but you'd be surprised how small the actionable flow can be. 25 or 250,000 is a decent minimum, is a decent floor, but there's flows that are like 100K. 100K is obviously far less than 250. That obviously wouldn't hit this filter. So, we have to make some sacrifices here and there. You got to start somewhere. So now we have some basic minimum set here. If we want to try to find stuff that's being bought, what we could use is an ask side filter, or we could look at contracts. And I want to direct your eyes right here to the chain activity portion of the screen. So let's look for contracts. If I input 0.7 here, this will show us in the corresponding column on the chart, on the screeners right here. This 0.7 value is going to show us contracts that have between 70 to 100% of their volume being at or closer to the ask. You can see here at a glance, we're seeing contracts. I guess this one's a slight bug here that I'll have taken care of, but we can see contracts that have predominantly more ask side volume. So we could presume, now this is just a presumption, that these contracts are being quote unquote bought. There's more analysis than simply looking for ask side. There's more analysis than simply looking for bid side, but we have to start somewhere. So this is kind of the beginnings of potentially like a buying filter. There's a couple more things we could add here, but just like a starting point, just some basic things to think about, a thought process. Using this same thought process will help you create an options flow feed filter. The flow feed differs from the screener in that the screener shows you data on contracts, right? So if we're looking at this line, the Tesla, oops, mouse here, the Tesla 650 February call right here. This data right here, the 48,000 volume, this is not a trade of 48,000. It's total activity on the contract as a whole, right? So that's the screener. But if we're looking at the flow feed, then the flow feed is the individual executions that make up the activity that we see in the screener. So someone is asking in the chat about Tesla. Tesla, pretty big day today. And there was a lot of like 600 strike flow. This among them. This one is actually a continuation. I guess we could start off the stream strong by going on a little trip down memory lane potentially. So let's just start from the beginning actually. So a few days ago, someone opened, and I will explain where I'm going with the clicks in a second here. I'm just trying to get to the beginning of the activity. So a few days ago, someone opened up the 500 weekly that expires tomorrow. I'm very close to finding it here. They opened these up on December 12th right here. Let's see here. Let me go back in the chart to December 12th. So this would have been a Friday. So Friday, this last Friday, let's hide the data here. So let's just close our eyes, pretend like we're back on Friday, December 12th. So December 12th at around, what is that, like 1:30, 1:35. There was significant 40,000 plus. I guess the exact volume is to the left of my cursor. Candle volume 42,949. So 43,000-ish contracts traded right here, right? So we see, I'm using the word traded as opposed to bought, just because that's honestly just the correct way to think about it. And there's actually quite high open interest here. So right off the bat, it wouldn't be immediately obvious if they were being opened, right? This activity, I guess activity would theoretically, I mean, this would have fit the, this would have popped up on the filters that we just put together on the screener. More volume than open interest. Daily volume would have been 81,000 at this point. The screener, what did we put, like 1,000, right? Minimum premium, we put 250K. This candle alone was 5.8 million. So I guess earlier when I said, it's not about the $5 million flow, I mean, sometimes it is, but like most times you're better off looking for like 6-figure flow. But anyways, so on December 12th, 500 strike weeklies hit pretty hard. And then in the pre-market of Monday, when you wake up bright and early, 6:40-ish Eastern, you get to see the open interest value. The volume obviously hasn't taken place yet because this is in the pre-market. So in the pre-market, you see the value of open interest go from 43,000 on Friday to 100 and about 8,000. So a significant increase in open interest from predominantly single-legged activity. The multi-column reading 5% reads as follows: 5% of the 140,313 volume was from a multi-leg trade. So obviously the inverse of that would be 95% of the volume was single-legged. So this candle was single-legged. Large increase in open interest, as expected. And then a couple days later, what day was it? A couple days later, on what day was it? The 16th. So let's just hide some of this data to look for just what would have happened at the time, right? So back in time, we go to the beginning, December 12th, in the middle of the afternoon, that big trade right there. And on the 16th, on Tuesday, if you're just looking at this chart, you see a candle of similar activity. Now, nothing explicitly says that this was this trader, but, and I say this every stream, we just have to take a leap of faith, right? It's not like, you see this, the size of the candle, it's like pretty plausible that they could be related, right? Just nod your head. Yeah, okay. And on this day, there was now the multi-leg percentage is only 26, but if you actually look at the trade itself, which I've pulled up in the feed, if we just look at the volume on this contract on the 19th, again, let's just look back at the chart. I'm looking at this activity right here, right? So we've already established that an opening trade took place here. And now we're looking at what happened here. Let's look at the tape and see what happened here. So we can see that there was a trade of, what did we say the initial activity was? We said it was around 43,000. Okay, lo and behold, There's a 45,000 trade here, so that's could potentially be them, right? We can see that it is a multi-leg trade. The trade code provided by the exchange that it transacted at is MLAT. So the prefix ML is multi-leg. The prefix SL is single leg. Auto is a single leg. So the exchange tells us it's a multi-leg trade. So that's a lot of information right off the bat. So we see it's a multi-leg trade. Let's see what other contracts traded at or around the same, basically millisecond, that could be related. So let's go back here. So I can't go back in time in the chart like I did in the last view. So let's just rewind here. So December 12th, the opening activity, this candle right here. Can we get smaller candles? Yeah. So December 12th, the opening activity that we mentioned right here. This 500 side, or the 500 trade, 45,000 volume that we were talking about here is this guy right here. And now this 500 volume, 500 strike volume was attached, or not attached necessarily, but it transacted at the exact same time as a 510 strike call for the next week. So for the 26th. So this was the start of their position. They closed it here, and then they opened a new position here. So December 16th at the 12:15 to 12:30, 15-minute period. Same thing right here. The trades take place at the exact same second. So, like, you know, again, we just have to use some deduction that the trades are linked. And now, so that is this guy right here. So now we see that today, a very similarly sized activity is taking place. So now if we take a look at what happened here, and now this is like a very long thing, but it's worth just kind of having an idea of, you know, multi-leg activity. Not everything is in a vacuum, right? I always say that flows in a vacuum. I guess the exception to that is when it's multi-legged. When you know explicitly that a piece of activity is attached to another piece of activity, like, isn't that a pretty valuable little bit of information? I want you to go to your brokerage right now. But actually, before you do that, the 510, so I guess this is a good example of not everything that takes place at the same second and millisecond is necessarily related. So the 510 December 26th flow that we saw get opened and then traded today, that's this volume right here. It transacted at the same time that a whole bunch of 650 February calls were traded, which also happened to take place at the same time that a multi-leg, that only two contracts here for these two. So these two contracts just happened to trade at the same time as these two multi-leg contracts. So like the system is including them in this view just because it's just a sheer coincidence. Like if you look at the activity here, like we're talking about 35,000 contracts on the call side. These puts have only two volume. So this is just like, again, you just have to use some deduction, right? Like, oh, just because it's multi-leg doesn't mean it's attached, right? Don't ask yourself why this trader is messing with, 35,000 plus contracts for the calls, but then only two for the puts. But as we can see here, the 650C has only 2,300 open interest. So obviously any kind of massive activity that we see is an opening trade. So you'll see the open interest on this go up quite a bit tomorrow. This one actually had some earlier activity as well, along with some other Tesla. So I know that wasn't what you wanted when you asked me to go over Tesla, but so let's actually do what you wanted, probably. Let me see here. What other contracts were there that got hit today? It was like a whole bunch of February. They're not showing up here. Let me see here. Let's go here. Was that like in the 9? It was before 10 o'clock, wasn't it? I think. I think this is the default filter, right? Yeah, so let's just set the default filter. Make sure we are on the default preset flow filter. Not everything that shows up here will be actionable, but this is like a nice place to start looking. We can actually see the Tesla contract that we're talking about show up here. But I'm actually interested in so I saw in the morning, like, there was a whole bunch of, why isn't this coming up here? What am I doing wrong? I'm doing something wrong. But there's a whole bunch of call activity. I guess the better way to look at it would be to just pull it up. I'll just search for them, because I know what they are. Tesla 640. What if I type this? So it was 650 that we talked about, 600, 655. Yeah, so I mean, like the 645 was one of the ones that had a lot of activity in the morning. I think like the 650, there was just a whole bunch of February expirations. I guess the easier way to do it would be the screener is also handy in this regard, right? So if I want to look at Tesla contracts, I can just pull up Tesla. I'm interested in the February expiration. Why? Because I just know. So if you know what you're looking for, then you can just go find it. February 20. Yeah. So I mean, let's see here. So 640 that we just looked at, 650 that we just looked at, 655 had some activity here. 600. That's not what we're looking for. 640 has some activity as well. Off highs. So speaking of like off highs, so like, don't think that this big money knows exactly what it wants to do all the time, because like, or that it knows, when to do this, when to do that. I think it was the 600 Februaries, right? Yeah. So these had a lot of activity. The 600 February calls had activity on what's today? Today's Thursday. So on Tuesday the 16th, there was a whole bunch of activity in the morning. Right off the bat, you had 13,000 contracts traded. And when right off the bat you have 13,000 contracts traded against an open interest value of 7,600, then you have a fairly, it's pretty rock solid that it's an opening trade, right? There's more activity later in the day, which could have potentially been a sell, but given the increase in open interest the next morning, you would have known that it wasn't. And then later in the day, you just happen to see pretty big volume. And when you see pretty big volume, if you know there's already someone that has a lot of contracts in the trade, and it's similarly sized, we have to make the leaps, right? And lo and behold, the open interest decreased quite a bit. So, they made them, the trade was at its highest, I guess, either at the close or the open on the 16th, 17th. But, I guess they're mid out even-ish or for a loss, I don't know. But other than that, Tesla, the morning flow was it, I think, unless someone else saw anything else. Let me just go back to that screener that I made real quick. Let me just rebuild it, and I can use it as a general basis for when people request contracts. So when someone asks like, what's the flow on XYZ, like what are they asking, right? It depends on it's a few things, honestly. Or I could answer it in a few different ways, I guess is the best way to put it. So, if you're asking me what's the Tesla flow, I can say, okay, well, let's look at the Tesla net flow just to get a kind of an idea of where potentially the general sentiment is. So we can see that with the call premium being high, it hasn't done anything since noon, but, from the open to about noon, the sentiment was, we can generalize and say that it was bullish. We can say net call premium is bullish. A negative put premium is bullish as well. The theory being ask side activity moves the line up, bid side activity moves the line down. So ask side activity in the morning on Tesla on the call side, bid side activity suggesting that people are selling puts that they own or writing new puts with the call line going up. The assumption being people are either closing their short calls or opening new long calls. Again, the bid and the ask are not guarantees of buy sell activity, contrary to the popular belief that is peddled frequently. So just something to keep in mind always. So let's just go back to that screener that I built, or let me go back to that thought. So when someone asks, what is the flow on XYZ looking like? So one way to look at it could potentially be the net premium. Another way that I might answer it would be to try to find any contracts, any flow that is potentially being opened. So that's just another way to look at it. So what was the filters that I put in real quick here? I'm just going to modify them slightly to what we said before, but the general gist will be the same. I'll go 100K here. Keep leaving your contracts and your tickers in the chat, and I'll get to them whenever I stop rambling. Okay, so I'm fairly close to a screener, and I'll drop the link in the Twitter chat right now. And I don't know if someone can relay that to X, but this is a general screener for contracts that have, I tweaked it to 60% or more activity at or closer to the ask. Everything else is pretty much the same. So in theory, this is potentially opening activity, and we'll look at the charts just to kind of just to confirm that it's at least potentially that it's at least likely opening activity. And sometimes you can just tell by the values, right? I mean, when you see 65,000 contracts traded against 100 open interest, you know that there's some opening activity going on here. This is quite far away. So yeah, indeed, it was just a single candle of that much activity. So if you think about it like this, can 65,000 contracts fit into 100? No, it's an opening trade. Let's see here. Let's just go back to the flow feed real quick. Are there any examples? Okay, so for example here, NBIS, we just have a random 100 strike March trade going on here for 100 size. The trade value is 77,000, or say, yeah, 77,000. Again, 100 size. There's another execution about a minute later, which could or could not be them. But anyways, we see a trade of 100 size, which is somewhere here. It's in this candle. Can we tell? Do we know if this candle is an opening trade? We don't. It's just the tiny trade of 100 in a sea of 4,000 open interest, as well as a whole bunch of activity previous that could potentially be opening activity as well, right? So if all of these contracts are being opened, which is about 4,000 volume, then that means that there's potentially 8,000 contracts floating around. So 100 size trade in a a sea of 8,000, no way to know for certain. So back to the screener real quick here. So most of these, I guess, what happened here? Volume is greater than open interest. Okay, yeah. So here's an example of a contract that is on the screener that I wouldn't necessarily think is that I don't think is anything worth looking at. So we have the Palantir tomorrow expiration 192.5 strike calls, which do have more volume than open interest, 38,000 to 30,000. They are trading 60% at or closer to the ask. Then when we look at the chart here, so again, 38,000 volume, 30,000 open interest, which is more volume than open interest, which satisfies a criteria that I harp on all the time, but that's not the only criteria. If we look at the activity on the chart here, it's just a, all day. There's all day, just a little bit here and there. There's no way to know for certain at any point if stuff is being opened or closed. Whereas the APLD is just very clearly, this is an opening trade. The open interest tomorrow will be, it will be 65,300 at the minimum. I guess I'll say it'll be 65,000 at the minimum, barring any activity that takes place later today, but there probably won't be. Oracle, this will probably be a single candle, but this, okay, so examples galore today. So I can just tell by looking at this that it probably doesn't really mean anything to us. So what do we have here? So we have Oracle, the 220 put, which expires tomorrow. The stock is trading at like 180 bucks. Let's just take a look at the contract itself. So this contract might have shown up on the screener yesterday too, potentially, right? If you don't look at if we just look at the numbers, we have a contract here that is trading 38,000, I guess 37,000 volume to 4,300 open interest, right? And that activity is taking place in a single instance. So we know that's an opening trade off the bat. Okay, so that's a good detail. None of the contracts are part of another trade, most likely. So that's a good detail. So, there's a few good things about it, right? But then we look here, the stock's trading at $179, $180. There was similar activity that takes place yesterday too, it seems. So yesterday there was around 37,000 contracts traded at the bid. I mean, I'm just trying to, basically where I'm going with this is that there's flow that is huge, that looks like flow, right? I mean, it satisfies a lot of things that I always talk about. Volume is greater than open interest, a clear opener, single activity, blah, blah, blah. But there are many instances in which there's always activity that just makes no sense. And this is probably one of them, right? So, there's how does the open interest decrease by 1,000 when this for certain. I mean, I know what happens, but like you have to ask yourself, like, or I'm not saying I know what the trader is doing, but like mechanically, the open interest is only going down because contracts are being executed as soon as they're being opened as a part of put arbitrage, which I guess we can look at real quick here. Put arbitrage, another thing that you'll come across that it's just kind of there, and it looks scary, but it doesn't actually mean anything. So the feed is flying by. I have a flow feed. This is literally every trade that is taking place. I think there might be like a minimum premium by default, or maybe not even. I mean, you're seeing single digit size here, but anyway. So put arbitrage. What is put arbitrage? So like long story short, put arbitrage is an activity that you will see on stocks and ADRs put on put contracts with super high value. So I've just input a filter of 1 million. You can do that. There's a shortcut where you can just type in 1M for million. You can type in 1K for 1,000, 1B. Works on most feeds, not all, most. But I want 1 million right now. So puts of 1 million on regular equities. And this is right now, you can see a whole bunch of them, right? You can see Netflix, 107, the stock is trading $94. 120, the stock is trading 94. What other names we have here? Nvidia, the stock is trading 174, but we have like 215 strike puts, 213. CoreWeave is trading at $68. We have 120, 140. So super deep in the money puts. But what is going on? So it's just a complex trade. It's called put arbitrage. That's what it is. It's just an arbitrage trade. And like, what does it look like? This is not the best example of it. So what you're looking, it's just some of the characteristics are, okay, so a put, like we went over a put in the money, generally multi-legged, not always at the ask, sometimes at the bid, right? So there's plenty at the ask, plenty at the bid. And this activity throws off a lot of scanners. Now, it doesn't really look like it's affected Nvidia too much, but for Netflix, it potentially had a big spike. So, I mean, these big spikes aren't actually, oh, this is someone buying puts. Oh, this is someone buying puts, selling puts. It's not actually that at all. It's just this big, meaningless activity taking place that is meaningless, right? So let me try to find better examples of okay, so here's actually a pretty good one. So we see the Master 375 put expiring in January. Don't worry about the expirations. Just look at the strike. Look at the equity price. 158. This is over 100% in the money. In the last 3 days, there's been big activity that has not resulted in any new open interest. In fact, the open interest has been decreasing. So like, long story short, you're a market maker, you find another market maker, you sell each other a put spread, you exercise the long leg, so you both have a short put. And when you exercise the long leg, that's why some of the open interest decreases. But you have a short put position that nobody's going to collect on because you've agreed with your friend not to collect on each other or exercise. So like, it's just a play on the interest rate. I wish I could explain it a little bit better. There's a white paper that I can try to link. I'll try to get that if someone reminds me. But you see it on a lot of contracts. Here's another example. Sometimes the open interest doesn't decrease, right? So we have 1,200 contracts traded here. No change in open interest the next day. Millions in premiums, right? 29 million, 27, 28 million, 29 million. No change in open interest. And this happens on a lot of names. CoreWeave, it's affecting the net premium chart. It affects the chart for many of the names. Maybe not NVIDIA, because there might just be so much other activity. But it's on many names. It's mostly on big cap names. You're not going to see it on smaller names. ARM, probably some going on right here. ARM is trading at 114. These are 53% in the money. So, I mean, it's some smaller activity of it going on yesterday, a little bit bigger, and then much bigger today. Many names. Here's an example of one that they've been doing it on for a long time. Not a long time, a week. There's examples where they literally do it every day for just months. Fig, these are like 200% plus in the money. Yeah, so this one's one where they've been doing it steady for a long time now. So I know we're here to try to find some stuff that's going to make us money. and this is exactly not that. But this is, I think, worth knowing. Because when you see people saying stuff like, "Oh, the put call ratio is it's so high," or whatever, like I don't think they're taking into account that there's like tens of thousands of this meaningless crap going on behind the scenes. Um, so yeah, I do not take any of those put call commentary seriously. It's noise. They don't know what they're looking at. Okay, but anyways, so screener that we built. Most of this stuff, again, you can't just assume just because it's hitting some fancy screener that you've built that that everything on there is gonna be good. But the screener is a good place to start. Let's just keep clicking around. Again, not everything's gonna hit. Not everything is a buy, even though we're looking for mostly ask side activity. The NVIDIA 185 call is expiring on January 9th. For example, we have a candle of 10,000 volume right off the bat, which is greater than 8,842. So you can reason that it's an opening trade. So yeah, just the filters are there just to do that, to filter a lot of the crap, but you can't filter out everything. I guess one way that I could have eliminated this specific meaningless flow that led us down this path is I could have excluded stuff that was in the money. That's might have been a good one to do. Now someone might go back in time. So like a stock like Oracle, it's down like close to 50% since highs. Let me pull that up real quick here. And someone might pull up the flow from. So the all-time high was in September. Someone might pull up some of this put arbitrage from like back here and say, "Oh, but like look at all these big puts." And I will not contest that. Yeah, I'm sure some of that stuff took place here. In fact, let's just go look for it. Just to see if it's there. So let's just go to September 26th. Oracle. Oracle puts 1 million. So the feed is only giving us an abridged view here because why is it doing that? Let me see here. It's a little bit hard to find historical data. Just trust me that it's there. I know you guys trust me on a lot of the other stuff. Just trust me on this one too. What am I doing wrong? I'm doing something wrong. Oh, is it this? What am I doing? That it? Did any take place here? Doesn't always take place, but it oftentimes does. I guess it didn't take place on this specific day, so I look kind of stupid right now. Just fine, it happens. Okay, so here's an example of on the day previously, on September 25th, with the stock trading at 290. The next day expiration, 350 had a 2-point-something million trade. So yeah, I mean, you see a big. This is the activity right here. So you see the activity on the 25th, which resulted in it is opening activity. Clearly, something happened here. Something was opened here, which was exercised, immediately after, which is why the open interest decreased. And it's not the best example. It's not a page. It's not pages full of the put arbitrage activity that I wish it was. Is there any other activity? Please. That's not it. That's not it. Just trust me. Okay, just trust me. More of it's coming in right now. ADP, Moo, Workday, Meta. Just trust me. All right. That was a rant. All right, so let's go back to the screener because someone asked about IREN, and that's where I went with this. So this is all. The point that I started with was when someone asked me what the flow is. What do I say? Okay, so let's get back to the example. The first example was I just look at the net premium. That's one way to just generally look at it. Another way is to build a screener as we've done here, which will generally have opening trades. Someone's asking about IREN. I'll punch in IREN here. So the only contract that shows up on this specific screener is the 1 DTE 36 weekly, which doesn't actually look like it has any activity that we really care about. It does have exactly the characteristics of the screener, but when we look at how the activity unfolded, there's no like single activity, there's no singular big candle of 4,000 volume that we know is an opening trade, right? We just have, the largest 5 minute period, or the largest candle on a 5 minute period was like 600 volume, which is just nothing in the grand scheme of this specific contract. So that's one way I might look at it when someone asks me what the iron flow is. Another way I can just look at it is to just generally look at the options chain as a whole, just to see what might be going on in the bigger picture. So one thing that we didn't notice on this specific screener, because this specific screener is only looking for stuff that has mostly ask side activity. If I did a mostly bid side activity, we would have seen this 25p, which I only noticed because I just happened to look at the totality of the IREN options activity. So the contract with the most activity was the 25 January 2, which is 30% out of the money, 16,000-ish candle. The candle size was actually 14,505. But an opening trade, not the most premium. So like, I guess at a glance, I might think if we look at the tape, we can actually see that the spread is quite wide. It is, what is the math? 18 cents wide. The trade is coming in closer to the ask, or closer to the bid, excuse me. It's coming in only 5 cents away from the bid while being 13 cents away from the ask. However, that does not guarantee that it was a sell to open. In fact, even if the ask was, or even if the bid was 32, that would not necessarily guarantee that it was a sell to open. It is, however, for sure an opener of potential meaning-ish. You can see the impact of the activity here. And the stock is going up, which is theoretically good for this trader if they are shorting a put. Shorting a put or writing a put is a bullish / neutral sentiment play. Not all puts are bearish, not all calls are bullish. So yeah, IREN, the only IREN flow of note today, I would say, is this potential right of a whole bunch of the 25p expiring in 15 days. So today's Thursday. The market is closed a week from today, Thursday, Christmas. On Wednesday, it is open until 1 p.m. So we have a 1 p.m. close on Wednesday, and then a all day off Thursday. Friday, I think it's just a regular 9:30 to 4 spiel. All right, let's go to the chat here. A lot of tangents. Someone's asking about the Norwegian cruise line. 24 strike call is expiring in January, and indeed, a bunch of activity here. So what are we looking at here? We are looking at. Actually, let me just go back to that link. That was a good link. All right, so we're looking at the activity for the 24 strike January calls from in this 5-minute period. So in this 5-minute period, look at the timestamp. So we have an execution. The big execution that we're looking at, or the big trade potentially, is all of these different executions which took place at the same time. Nothing is explicitly linking them as belonging to the same trader, but again, we have to take some leaps of faith here and reason that that all of these contracts being traded at the same time, that are clearly being opened based on the volume and open interest, and I'll get to that in a second. We have to just reason that it's linked activity. So again, the 1:04:25 Eastern timestamp is where this activity begins. This is the first execution of what appears to be this entire trade, right? So this trade of around 3,400-ish volume. So the first execution, 15 size, taking place at 31 cents. So before this size 15 trade, there was, 97 volume. So prior to this trade, there was 97 volume. This trade of 15 happens, 15 plus 97, 112, 15 plus 112, 127, etc., so on and so forth. Why is that jumping there? What's going on? Hold on. 15. Why is it jumping? Is it a bug. Might be a bug, but I'll have it checked out. But so my point is that the volume goes up, right? So we're looking at all the activity here. So if all of this activity, if the open interest is 1,600, give or take, and we see the volume go from basically 100 to 3,600, that means that 3,500 volume took place in this screen that I'm scrolling around. And we know that 3,500 volume is more than 1,600 open interest can handle. So we know this is an opening trade. Furthermore, it would appear that this is a buy to open, I would suppose. So again, let's look at the timestamps. We have a 104.25 timestamp for all of these different executions, which likely make up this singular trade, right? That's like kind of the exact terminology that I would use. So the spot price starts at 31 for the first few contracts that they traded, and then it goes to 32, which has me believe that it's probably a buy. And again, we've already established that it's an open, so I guess the theory is that it's a buy to open. The theory being that there was no more 31 asks left over in the dealer books, so that's why the spot bumped to 32. So yeah, I mean, clear opening trade. An identifiable opening trade. It's not always a single candle. There's sometimes flows that are like multiple single candles that you can reason are all being opened. But again, a candle of like this candle was 3,900 volume. Can't fit into that little open interest, so it's clearly an opening trade. Yeah, so that's a clear opener. I like that. It's a good example of the spot price increasing intra-fill for this potential trade. It's probably a single trader. I mean, again, how likely is it that all these different individuals got together to trade this contract at the same time? Probably not very likely, right? Cool. All right. Someone's asking for CVNA. Let's flip back to the screener real quick here. So remember we were talking about contracts that were mostly at the ask, 60% or more volume at the ask, or 60% or more volume at the bid. Well, instead of having to flip through two screeners, if I input that 60% value here, we see a mix of contracts that are both 60% bid side, 60% or more bid side, or 60% or more ask side. So that's kind of a nice combo here. So the next contract is CVNA. Does anything hit these specific filters? So the stock's trading 464. So we do have some puts that have mostly bid side activity, bid side volume, and judging by the volume and open interest, probably both openers. Are they single candles or okay? So here's an example of one where these are probably all being opened. How do we know that they're all probably being opened? Well, so at the beginning, first there's 1,000 contracts, right? And that is clearly an opening trade. There's only 307 open interest. So when we get another candle of the same size, what are all the possibilities? So the possibility is one, it's the same trader adding their position. Two, it's the same trader closing their position. Or three, it's someone else, which is probably not very likely. So the two more likely possibilities are it's someone adding or someone closing their position that they just opened. But then we have when you get another candle, is it likely that they opened, closed, and then open again? Probably not. So now I'm going to reason that this is an open, an add to their position, and then potentially a further add. Now, are they all rights to open? I don't know. They're all very much likely openers. You should see open interest go to 3,000 plus tomorrow morning at 6:40-ish Eastern. Be there sharp just to check it out. While I have your attention, if you want to quickly get a push notification, when you have this little contract chart thing up, just hit this little bell, chain open interest changes, Now I've just created, I'll get a push notification. If I'm logged into the app on this account, I'll get a push notification at around 6:40-ish, and it will tell me what the open interest is. And it should be 3,000. If it's not 3,000, then something's fucked up. It'll be 3,000 though, most likely. All right, let me know if it's not though. The other contract is this one right here. So just 1,000. It's kind of the same situation at the beginning. 1,000 volume, 45 open interest. Clear opener. Recent S&P inclusion, unless I'm just remembering completely wrong, right? Yeah, recent S&P inclusion. The other ways to look at it is, generally speaking, we have more call premium than put premium. Put premium is negative. Call premium is positive. But these charts by themselves don't really tell you a whole lot. We have to apply. You have to actually look for contracts, right? They're good to look at for just a general sentiment, but at the end of the day, you need to find actual flow. We need to actually find specific positions being opened in order to have any idea of what's actually going on. So potentially someone writing a few puts here. What does the tape look like? Any clues? Do we have any changing spot prices? No. Just looking around, there's so much activity here. Doesn't look like we're getting any. Well, the fill does increase here for this initial 1,000. Which does that mean? Doesn't necessarily. Is it a buy? Who knows? I mean, again, at the end of the day, no one knows if it's a buy or sell, really. So you just have to do your best reasoning to find the plays that are the most likely to succeed. One of them potentially being our friend Burlington, if you guys are familiar with the Burlington Coat Factory. An interesting ticker in which predominantly all open interest on the puts belongs to short puts. So if we look at the Burlington open interest, highest open interest contracts, stock is trading at 270. Basically, all of these puts are just someone that's been they've been at this for like a year and a half. They just short puts. This one might be the long. Nope. So this one is they shorted 32,000 contracts here. They shorted another lot. You can see it in the open interest on November 25th. An exact increase in open interest. So nobody, I guess, tailed them on this day. But they opened all these contracts. They opened all these contracts here, and no one knows if they're a buy or a sell. But like, I've been watching someone do this on Burlington for like a year and a half, and they've only lost like one, maybe two times out of like 15 to 20 different trades. So that's definitely statistically significant, if I would have to say. So when someone in the chat is saying they don't like the Coat Factory, no, au contraire, my friend, they love the Coat Factory. So a short put, the theory being that they are selling / shorting these puts, which is a bullish to neutral trade. So if, for example, for this specific contract, if you are short the Burlington 220 put expiring on January 2nd, that means on January 2nd, you would like Burlington to trade over 220. Supposing it trades over 220, if you are short a put, your position expires worthless, you profit. So there's potentially 538,000 on the line here for this lot. This lot is 500,000. So this is basically a million size trade. This one expiring on the 16th. This one is a $1.7 million trade. It's a similar size. Like this guy just did it, or this girl did it in one go this time, as opposed to two lots of 3,000. They did this one like 2 weeks ago. The March 210, 3,500, 1.6 million. I mean, come on. It's the same jabronet. But anyways, this one was just a few days ago. So here's an example of some interesting tape. You can see that these are both their executions. They took place at 3:12:52 p.m. Eastern 2 days ago. The spread is quite wide, but the fill drops, which has me thinking that it's a short put. Now it didn't drop in that that one, was it Carvana that we just looked at a few seconds ago? But I mean, again, if you just showed up for the first time today and you were trading options and you saw the burl, you wouldn't know that there's someone out there that's doing this shit. But like, unless you went on a little secret, there's someone who's pretty good who seems to know what they're doing. So pay attention to the Burlington flow. Not financial advice, just pay attention to it. Just happens to work. I'm just stating facts. 90% plus win rate. Simply a fact. That's it. Someone is all right. So we got Nike. We only got 10 minutes left, but I'll keep going a little bit longer because I've been talking about random shit that you guys don't care about that much. Nike expected move is 6%. Is there a trend recently? I would say probably not. So what are we looking at right now? We are looking at the historical expected versus actual move post earnings for one day. So how would I read this? I would read this specific one as Q4 2022. For this quarter, the earnings priced in a move of plus or minus 6.81%, and Nike actually traded way outside of this move, which is why this is red. So regardless of if it trades above the move or below the move, as long as it trades outside the move, it's red. So it traded plus 12.18% that day. So any call buyers, they beat out Theta big time. Here's an example in which the expected move was, or where it traded inside of the expected move. So in this case, I guess you would say Theta Gang 1. So not really a discernible pattern here. There's been I don't know. I mean, if you put a gun to my head, I would just guess maybe down, just simply because I've seen a lot of opening puts lately. And I don't know if I can pull them up now. If someone knows I think there were some today too, even. Let's go back to the screener here. NKE, maybe not. Nike Thursday. What about yesterday? So yesterday, I guess there was a mix of activity yesterday. So yesterday, a big Nike ask side activity here of about 10,000 contracts. The open interest increase was to be expected, single leg. 60p, mostly bid side activity yesterday with the resulting increase in open interest. And then more activity today. So like, who knows what's going on here? And you're going to hear me say that a lot because I'm not afraid to say I don't know what's going on. Because sometimes you just don't know what's going on. The numbers don't really make sense. They don't line up. You don't know the candle. Like, could this trader potentially be that? If that is one observation maybe that is feasible, but it's hard to say with any confidence. Is this related? Who knows? 64. We just looked at. No, it's a different activity yesterday. Who knows? What is the actual priced in move? So the range that is priced in is $62 to $70. So the options market has priced in a plus or minus 6% move, about $4. So consider that when you are placing your Nike trades. Remember to factor in your break even, right? If you pay, for example, if you were to buy a Nike 64P expiring tomorrow, you would pay about 140 right now. So you would need Nike to trade at 62.60 before you started to even sniff any money. So consider your break evens. Yeah, I mean, earnings flow, it's a coin flip, I'd say, but it just seems like there's a lot of Nike put activity. But don't do anything based on what I said, because I don't know. Actually, let me take a look at that net premium charge, because I didn't look at that at all. Net premium for the last couple things. Now, this doesn't necessarily mean that people are writing puts into the earnings print. That could be some of that put arb that we just looked at a little bit ago. And let's just actually see. I think it probably would be. Nike premium or puts, let's go 500K. Yeah, so Nike trading about 65, 66 bucks. We have a whole bunch of this 125, 120, 100. Like, so none of this is actually people writing these puts. Some people are going to interpret it as such, but that is not the case. Do we see any interesting stuff going on here? So yeah, the 120 put expiring on January 16th they've been at this for a little bit now. This is the volume column, 61,000 or 6,100 contracts traded here. No change in open interest. Just never really any change in open interest, even though there's trading in millions in the premiums. They did it a little bit further ago here in September as well. So, yeah, I mean, this one, I guess this is the best example there is, right? There's just zero open interest, so there's literally no contracts traded, and even though there's 1,000+ volume every day, there's still no open interest. But this activity all still jerks the chart one way or another, right? So December 11th, this green candle right here, that's probably responsible for this little rip right here. But this actually means nothing. This is not actually anything. This candle of 14 mil is responsible for a massive decrease right here. One of these two right here. What time is it right now? What time was this? This was at, let's go to the 1 minute. This was at 2:38-ish. And it drops at 2, can't get the cursor right. Yeah, I mean, it's that. So meaningless activity skews the net premium chart all the time. So don't just trust the chart. Don't just trust the chart. All right. Someone's asking about LTM. We're ticking down here, but let me just try to rip through these. 11640p. Clear opener. No open interest. So yeah, I mean, unless there's another like instance of volume here, the open interest will go up by, it'll be like 6,000 plus tomorrow. Speaking of open interest, we are thinking about doing like a pre-market stream maybe once in a while where we wake up bright and early, maybe like 6:50 a.m. Eastern, and then we go to the open interest change feed and we gather around and we look at stuff and you guys request stuff and then I give you the read as I would interpret it, just to help you guys maybe understand a little bit what took place. So the open interest change feed has some very similar, all the feeds do. You can basically build the same screener as we did for the option screener, but for changes in open interest, right? So if we wanted to see potentially contracts that were bought yesterday, I want to look for, and this data would be available at around 6:40 a.m. Eastern, so way in the pre-market. So we can see changes in open interest. I want to see changes in open interest for only stocks and ADRs. Show me contracts that traded 70% of their volume at or closer to the ask yesterday that also had a minimum premium of, let's just say $250,000. What's going on here? Oh, that's the wrong filter. 250,000 max multi-leg of 0.1. Is that basically it? I mean, I think that's basically it, right? Let me hide a couple columns that I don't want to see right now. So this should theoretically show us, and you can see right here, this column shows you what the chart pretty much looks like. And when you combined volume open interest data with the chart, you can basically just tell what's being open or not. So yesterday, TMC, I mean, TMC is a tricky name, but there was a large opener yesterday. So in the pre-market, you would see the chart from yesterday. You would see yesterday's volume data, of course. You would see the open interest, of course. And you would also see this 31,000 value, again, in the pre-market, before anything happens. Before a single volume takes place, we see these values. So in the pre-market, you get like an idea of what happened. So yesterday, if you were thinking, oh, I wonder what happened here, let me check the open interest to see potentially what, how the open interest shook out. So yesterday, you could have seen, so I mean, this one, you would have known the open interest would increase because there's no large volume, right? When you have, I mean, I guess theoretically, some of this could have been closing, but the open interest was going to increase by at least several thousand. Given what you would have known yesterday just by this data right here. then you wake up in the morning and you see, oh, it actually increased by this much. So what does this value actually tell me? This 11,000 value tells me that not only was this an opener, but these two were also opened. Is that useful to know in this specific context? Like for this Nike contract? Like not really, but like you need to know how to read like, oh, if this happened, then it's because that happened. Let's just click on a couple other random ones. So Neo, yesterday, this wouldn't have popped up on the screener because it's only 10,000 volume, and 10,000 is significantly less than 77,000 open interest. So this doesn't pop up on any volume is greater than open interest screener. But we see the change in open interest. So that is like after the fact, we see, okay, so actually these contracts were all open yesterday. Okay, so now that's a little bit of information that I'm armed with in the pre-market. Now that specific contract, probably nothing too interesting there. One. So I guess this activity today is dwarfing yesterday's activity. But yesterday, what's happened to my screen? Yesterday there was some activity in the Palantir. Now this is not necessarily good flow just because it's on the open interest screener. But there was some activity yesterday. This 5,000 volume that took place yesterday obviously can't have definitively been identified as being opening activity, but then given the increase in open interest, you know, after the fact, okay, position was opened here. So just some stuff to think about. I think there's another way that we can do previous volume is greater than open interest. Previous volume to open interest ratio. I'll have to look at that. But anyways, let's keep going here. Someone's asking about, this is the screener that we built earlier, I believe. Someone is asking about, just go through a couple more contracts here. If I miss you guys, sorry, come by in the future and I'll try to get you guys. The early bird gets the worm in the chat. So Starbucks clear opener, only 9 open interest going into today. A big 15,000 size trade for around $250,000 in premium. I think I saw I might have seen some potentially bullish Starbucks flow. I thought I saw like a nice opener. Is it on this screener? Can we see it? No. Did anyone mention it in Discord? I think it was this one. Might have been this. This one's actually quite small. Maybe not. So Starbucks, I don't think there's anything too significant. Again, these bumps are probably just that put arbitrage that we mentioned. Starbucks trading at $90. Let's just flip over here. I'm sure we're going to see some crazy Starbucks stuff here. Yeah, so Starbucks trading at $90. All this stuff is very much in the money. I'm just going to click on the first one, the 105p expiring in January. That same kind of meaningless activity that makes no sense. Well, we know what it means, but it's meaningless to us. It's meaningless, but it affects the chart and distorts it, which is unfortunate. But we just have to be aware of that these things take place. And you actually see that this takes place on Starbucks like on a daily basis, pretty much every day this week. Maybe Monday they don't do it, I think. But it happens quite, oh no, this is Monday. They do it all the time, is the point. See if there's any quick questions here. All right, hymns. Let's just look at hymns real quick. Deleted this screener that I made. Let me go back here. Any hymns flow about? Does not appear so. On the scanner that we built. That doesn't mean that there's anything going on. That's just the screener that we built. Probably some put arbitrage going on the 50p. That meaningless crowd that we just talked about. This is an opening trade, but like it doesn't mean anything. The stock's $35. It's not going to expire out of the money. And if it does buy some bullshit news, then it's not because of this trade. I promise. Same with this one right here, 55p expiring tomorrow. It's not going to expire out of the money. Don't worry about it. So yeah, hymns doesn't appear to be anything there. which is what happens sometimes. I guess I'll just run through these. So I can't go through all the exact contracts that people are calling out, but we can just quickly flip through some of this here. So someone mentioned the ACHC, that is Isaac. There is some, at a quick glance here, I mean, these are probably opening activity. If I just click through here, yeah, I mean, this is clearly opening activity. Not the biggest activity we've seen, but clearly openers. This one clearly opening. Yep. TMC is a popular one that has a lot of flow. It's a volatile ass name. I mean, sometimes you go up 20%, then you go down 10%, up 17, down 10, down 10. So it's a wild name that has a lot of wild flow sometimes. So the 8C next week, which we saw a little bit ago in the screener. So this candle was about 18,000. There's an open interest increase of 30,000. So we can very likely reason that not only did this person hold, but a whole bunch of other people held as well. Potential stragglers adding, maybe some of this earlier stuff selling, who knows? Now there is 13,000 open interest, or 13,000 volume today, which is a lot of volume, right? That's a pretty big number. But if we look at the chart, it doesn't seem like there's any there's no candle like this size. So any increases are of smaller whales or smaller traders that aren't super significant. So to apply things in context, right? So yeah, 13,000 volume, a lot of volume, but for sure. But if we look at the chart, there's nothing really going on. Someone's also asking about Rivian. Yeah, Rivian's up bigly today. Someone is asking about, I'll just click on this contract since you posted it. So we have, so it's an opening trade, no doubt. The 25C expiring in June 2026. I can see there's a decent chunk of multi-leg activity. Why is the candle gray, you might ask? Let's take a look at the feed. We can see this activity taking place here. So it is gray because it is a cross trade. And what is a cross trade? A cross trade is basically a trade in which you and someone at your firm are basically saying, hey, I want to go long this position. Someone else says, oh, hey, I want to go short this position. So you guys both agree to be each other's counterparties. So like there's not really a buyer or a seller. It's like two people who are both want to do this position. And what this little symbol means, and unfortunately there's no actual data here because, and what I'll explain what it means. So this symbol means that there's stocks attached to the trade as well. So like an unknown quantity in this specific example, only stock trades that execute on NASDAQ stock exchanges will be shown here, and they didn't take place on a NASDAQ stock exchange, so they're not visible here. But like, you don't know. So we know for certain that the 25 strike calls are being opened, but we don't know but we know that it's a cross trade. So there's like a mutual counterparty. So it's like not really like nobody's buying. Like, yes, someone's buying. Yes, someone's selling. But like, which one are you going with? You know what I mean? And then on top of that, there's an unknown quantity of equities being traded. So like, someone could be buying. Like it could be a buy, right? It could be someone buying. What would that be? 0, 0. How many shares would that be? 12,500 times 100, whatever that is. Is that 1.2? So I mean, that 1,250,000 shares potentially, along with shorting the calls. Who knows? They could be shorting the stock while buying the calls as a hedge. Who knows? There's infinite combinations basically, and it's a cross trade to boot. So like, I don't really look at cross trades just because I think it's unclear. Like there's no directionality, right? If someone wants to sell you something and someone wants to buy it, again, like who are you going to side with? So I think not much to look at there. Hims, we looked at Hims. Nike, we looked at Nike. That'll be it. I talked a lot about stuff that doesn't really help make you money today, like the arbitrage, the Tesla rolls. But I think some of this stuff is like mechanically, you need to know that this stuff is floating around out there so that you can track your own rolls in the future potentially. And you can avoid the pitfalls of relying on a net premium chart. Maybe Rivian doesn't have any of that put arbitrage going on, but many names do. If we flip back here, it's just constantly going on. It's 340 right now. Recently, we had some NVIDIA, Nike, LYB, whatever this thing is, probably. So maybe they're starting to do it now. There's no history of it, but maybe they're going to start now. So again, don't see the large bid side puts and think, oh, someone thinks NVIDIA is going to go above 200 by tomorrow. I see a lot of people interpret it on Twitter and stuff like that, and that's just incorrect. All right. That'll be it for this week. Next week, like I said, we're closed Thursday, so we can't have a stream next week because we'll be doing other stuff. But I will figure out. I'll figure out a day. Are you doing Wednesday or no? Wednesday's 1 p.m. close. I'll do Friday. Yeah, put me down for Friday. At some time, probably the same time. So just yeah, I'll see you guys Friday. Not tomorrow, Friday. Next week, Friday. All right. Thanks for tuning in. I'll see you guys next time. See you.